going on right now. Our guest panel rejoins us. CPA, market analyst, best-selling author Dan Geltrude. Also from Walzer Wealth Management, Rebecca Walzer, and our very own Jackie DeAngelis. We should also point out, by the way, the S&P had a pretty rock and roll month, the best since 1955. So there are a lot of records that were broken. What do you make of it, Dan?
Well, I think the issue here, Neil, is that if there were concerns about China, there was a hedge because the Fed stepped in and said, hey, we basically have the president's back and we're going to potentially lower.
Isn't that ironic, given the
yes,
friction?
It is. Well, you know something, Neil? The president has put quite a browbeating on them, and you really wonder whether that's had some impact. But the point here is that Trump has nothing to lose by negotiating hard, because if things don't work out with China, he's got the Fed behind him lowering rates, and that will help the market. And that's why I think the market did so well this past month. You know
what's amazing, Rebecca, when you think about it, I don't know what the next 6 months hold, but it's going to be hard to repeat the 17% surge at the S&P this first half. What keeps it going? Maybe not to the same degree, but what are you looking at?
Well, I mean, obviously, we would love to see an actual China deal where they're agreeing to change their laws and they're going to stick to it. You know, not this 6 month. We'll just see what happens in 6 months. You know, a real deal would, I think, be a great market situation.
But it has to be a real deal.
It has to be a real deal with teeth. We've been saying that forever. It can't just be this fake. You know, that's the problem. That's the reason they walked away the last time, is because they didn't want to put a deal together in writing and sign it that had teeth, and they made them change their laws. But I think we have all been waiting for actual resolution since last year. So a Chinese deal would be amazing. The Federal Reserve, I'm a little bit cautious. I don't want to see them cut rates really right now, especially next month, because I feel like we have a little bit more legroom and runway in this economy, and I want them to have the leverage they need to have when we do need them to cut rates seriously because of some major, like, let's say we don't get a deal. Let's say that Trump says it's not going to happen, we don't need a deal, we're doing fine, we got all this money coming in from them, like he keeps saying. That's when the market's really going to say, oh man, and we're going to need the Fed then, and we can't deal with an anemic.
So if you have a deal, I mean, you could make the argument, Jack, you have a deal, there's less reason for the Federal Reserve to cut rates, and I always go back and forth as to what the market really wants. I mean, if you get a deal, they've been waiting for that. But the flip side of that, it also means the Federal Reserve would be less likely to cut, would have less reason to.
I think the market has a checklist here. So one of the things they were watching for was the Fed, and the Fed's been, you know, patient and cautious. So if we get that cut, it's going to come later down the line. The Fed wants to see.
You don't think July?
No, the Fed wants to see what's going to happen with China. So that's the first issue. But the president has checked off a lot of things that was worrying investors. The first would be USMCA. Seems like we're on track there. The second was the border issue with Mexico and the potential increase of tariffs that could, hinder those negotiations. And then China was the outlier, right? And we're getting some signs here that progress is being made. And he has been a master negotiator, holding the Huawei card and using it right now, saying we're not going to put additional tariffs on. We're going to hold the tariffs we have, but maybe the talks progress. And he does lift those. So he's playing this like a chess game. The market sees that, and that's why you had such a stellar first half.
You know, Dan, think about it. On Monday, I think it's the 10th anniversary of this recovery, the longest recovery in American history. I don't know how that compares abroad, but it's pretty long. Is any of that in peril to you, or do you just see this chugging along?
No, I see it chugging along. In spite of what happens with China, I think that this economy and the market are in a good place, and there is really no reason to panic. If you look at all the signs in the economy, where's the downside? You have very little inflation. You have a situation where jobs are being put on every single month, whether they meet expectation or not, it doesn't matter. And I just think that it's an economy that right now is got consumer confidence, and it's going to continue.
You know, Rebecca, I look at it though, and I say it's odd to have a market jumping with bonds jumping, gold jumping, oil jumping, for a while Bitcoin jumping. So everything was rising. Something's got to give.
Yeah, it's definitely breaking some financial laws that we've been used to for hundreds of years. There's no doubt, you know, and Neil, the thing is I agree that we have strong economic fundamentals, and that's what's long-term important. But we do see some signs, and I am concerned, and we definitely need to make sure that we are not, you know, taking things so far to the left that we can't recover recover economically, you know, and
But
China's
there's
a big
enough
one.
bearishness out there,
Yes.
or caution, that it would offset the giddiness, right? I mean, a lot of people look for that as a constructive underpinning to keep markets going.
And there are two arguments to this. You could look at what's happening in the bond market, and you can look at gold, and you could say that's a safety trade that's on the table. Another way to look at it is to say that investor appetite, at least here in the United States, is very strong, and they're looking for a diverse group of assets in which to allocate their funds, and that can continue if the president keeps these policies moving forward that make investors feel confident. Stocks and bonds can rally together.
But what I find interesting, Dan, it's a great time to buy meatless burgers and their stocks and gold. I'd never remember that.
Well, that's something to think about, Neil. I don't know how you feel. I don't know how you
These
feel
are
about
the things, you guys are the pros, and these things I look at and say, that's weird.
I don't know how
there.
you're feeling about meatless meat, you know.
They taste great.
Arby's is
Just
making
like
carrots out of meat now, so they're making veggie meats.
They're
Thank
called
God
merit.
for Arby's. Thank God for Arby's.
Got the meat.
There we
Free
go.
commercial.
Guys, thank you all very, very much. In the meantime,